The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Greetings, everyone. Happy Thursday. Welcome to another edition of Breakout Investing on TFNN. Now 5 days a week from 3 to 4 Eastern, just before the Tom O'Brien show on TFNN. He'll be coming up after my show in about 1 hour from 4 to 6 Eastern. But thanks very much for tuning in. If you want to give me a call, please do so, 877-927-6648. Head over to iTunes. If you can't listen to the show live, you can get it as a podcast over at iTunes, so be sure to check that out. And you can listen to all TFNN programming on your smartphone now, tfnn.mobi. That's all you have to type into your smartphone browser. Open up your smartphone browser, type in tfnn.mobi, and you can listen to the stream that way as well with your earbuds. And don't forget to check out Tiger TV as well on the homepage of tfnn.com. My show is carried live every day on Channel 1. You can look at charts that I'm looking at on my screen, and Tiger TV is also viewable on your handheld device as well. Well, looky here. We got a little bit of selling coming into the market today. We've been a little bit spoiled here, used to this kind of sideways action in the market for several days now, just kind of not doing much of anything, but not really seeing that much in the way of institutional selling. So I guess that's the silver lining today. Right now, the NASDAQ Composite down 25 points, 0.8%, trading right in the middle half of its trading range for the day. NASDAQ Composite right now around 3,056. You can see still holding nicely above its 50-day moving average here at 2962. Let's swing over and take a look at a weekly chart for the NASDAQ, and we'll see its 10-week moving average here at 2985. So NASDAQ Composite still holding above support. Even with today's 0.8% decline, we are still holding very bullishly near highs here, and it is just a day like today does not make me feel like running to the sidelines and taking profits in certain names in my ultimate growth stocks model portfolio. The goal is to pick growth stocks at the right time, buy them at the right time, and hold on to them. Be patient for big gains. That doesn't mean you want to let a small loss spiral out of control and get unmanageable. I'm not afraid to cut losses if the market tells me I'm wrong with my timing, but a day like today, again, it's not really seeing much in the way of institutional selling at all. If you thought volume was light yesterday in the market, 507 million shares on the New York Stock Exchange, 1.25 billion on the NASDAQ, well, we're tracking even lighter than that today. Not by much, but just a few percentage points lighter, and that is what tells me that the selling today is not really being fueled by institutions. And certainly when you look at all the, the institutional quality growth stocks, some of these market leaders are not showing any signs yet that they are breaking down. Of course, we've got a big speech tomorrow at Jackson Hole, Wyoming, at the Kansas City Fed Annual Economic Symposium. Ben Bernanke will be speaking at 10 a.m. Eastern. Lot of anticipation, a lot of expectations, a lot of predictions about what Ben Bernanke is going to say. I really don't have any idea. I'm not even sure how the market is going to react to it. The common consensus seems to be that we're not going to hear a whole lot from him regarding specifics or timing of possible QE3. There are some that think the Fed will act September 12th and 13th. The release of the Fed minutes recently sort of insinuated that they were close, but statements from certain Fed officials since then tell me that it's far from a sure thing that the Fed will act September 12th and 13th. I mentioned yesterday on the show, Goldman Sachs came out with a note, it was either yesterday or the day before, saying they're not, at the earliest, they're expecting the Fed to act at the December meeting, but it may not be until 2013. So we'll see. We'll see what Ben Bernanke has to say tomorrow. His speech is entitled "Monetary Policy Since the Financial Crisis," or something along those lines. Monetary policy since the crisis. But again, certainly a lot of good news has been built into this market. There is a chance the market could come away disappointed with the content of Bernanke's speech. But as always, we'll watch price and volume in the major averages and sort of decipher how the market reacts tomorrow. Okay, so that's a look at the NASDAQ composite. Let's take a look at the S&P 500 here. We'll see that the S&P 500 right now down about 8 points, 0.6%. It's trading in the bottom half of its range, still holding above its 50-day moving average at 1375. The S&P 500, again, down a little over 8 points to 1397. It has not come far off its recent high at all. So fairly tame selling in the S&P 500. We'll switch over, take a look at a weekly chart for the benchmark index as well, and see that it is still holding above its 10-week moving average at 1385. What you have here going on, not only with the NASDAQ composite and the S&P 500, is this little handle area forming in the technical setup. When an index approaches a prior high, again, it can often pull back a little bit. It's called a shakeout, preferably a mild shakeout before a possible breakout. So not surprising at all to see the price and volume in the NASDAQ and S&P 500 coming in a little bit today, but not much volume behind the declines. Taking a look at crude oil today, down 0.9% to $94.62 a barrel. December gold down $5.60, 0.3% to $16.5730 an ounce. So oil and gold under a little bit of pressure amid a strengthening dollar. The U.S. dollar index was recently trading around 81.70, up about 15 ticks or so. It is still trading well below its 50-day moving average here at 82.59. So if indeed the dollar does start to rally from here, which is far from a sure thing in my opinion, it could likely face a little bit of resistance at 82.59. That said, I thought that the VIX was going to face a little bit of resistance at its 50-day moving average. But as you can see, we take a look at the VIX today. It is up 3.3% to 1763, and it closed just above the 50-day moving average yesterday, and it gapped up today. So it didn't have any problem reclaiming the 50-day moving average here. That means that it could try to make a run here to its 200-day moving average at 1992. And again, it's not uncommon for moving averages like the 50-day, 200-day to turn into resistance levels once a stock or ETF falls below these support levels. So no resistance at the 50-day for the VIX, but 1992, which is still about 2.5 points away from that price level, could be a ceiling for the VIX. So that's where we're at there. Bonds, money flowing into bonds today, no doubt about it. Let's take a look at the iShares Barclays 20-plus year Treasury bond fund. It is near its session low now after hitting an intraday high of 126.44. It is trading at 125.99, pretty much at its session low, trading in a very tight range here. Here's another example. The TLT comes down to its 200-day moving average, starts to move back towards its 50-day line, and right now it looks like a ceiling here. So it remains to be seen if the TLT is going to be able to get back above that 50-day moving average. Of course, rising or people buying bonds is causing yields to back up a little bit. Let's take a look at the 10-year note here. Yield on the 10-year note right now about 1.62. 2%, holding just above support here at 1.59, and the yield on the 30-year note, it'll be TYX in stock charts, that is down a little bit today, 2.74%. So you can see the chart plotting the yield of the 10-year note and 30-year bond looking very, very similar here. Economic data today, we had weekly jobless claims unchanged from the prior week. They're at 374,000 right now. Estimate was for 370,000. Claims from 2 weeks ago were revised slightly higher to 374,000. So again, 374,000 last week as well. So unchanged from an upwardly revised 374 the prior week. We had personal spending up 0.4% in July. That was the largest increase since February. Personal incomes rose 0.3%. Take a look at some same-store sales data today. We had a lot of it earlier today. I'll tell you what, that turnaround at Gap is in full effect, looking very, very solid. Shares of Gap outperforming again. I mean, make no mistake, this is an extended stock after a recent breakout over 29. Here was the last base that it broke out here. So it breaks out over 29, gaps up on strong earnings, continues to move higher. But the last buying area was $29. It's now trading around $36.28. So it's a little bit extended. In fact, a lot extended here. But its price strength has just been tremendous. And you know, the turnaround, very impressive. What the Gap has been able to do after, frankly, many people left this stock and company for dead. But they're doing very well, executing nicely. Shares of Gap up 3.2% today to $36.28. Same-store sales in August were up 9% versus an estimate of 5.3% at the namesake Gap stores. Sales were up 9%, 8% at Banana Republic, and Old Navy continues to do very well. Same-store sales there up 12%. So good numbers from Gap. Let's move on, take a look at some other retailers here. Department store Macy's. Macy's kind of unchanged. It's down about 12 cents now to $40.35. This is another strong retailer. Has been in a solid uptrend for several weeks now. Same-store sales at Macy up 5.1% versus an estimate of 3.6%. Shares of Target had good numbers. You had, throughout the retail sector, the numbers were pretty darn good. I mean, most companies, the vast majority of companies, beat expectations. Shares of Target up 2 cents today to 64.28. Another stock in a strong uptrend here, not showing anything at all in the way of sell signals. A little bit extended as well after a recent breakout over 59, but same-store sales at Target were up 4.2% versus an estimate of 3% growth. And is there a month that goes by where we don't talk about limited brands, and another solid quarter, solid month of execution? Limited brands is in a pretty good base here. It is up 26 cents to $48.03 today. Keeping an eye on this one for a cup with handle breakout over 50.75, but I mentioned a couple of shows ago that this is erratic. I'll tell you what, we'll talk more about limited when we come back. I'm going to pick apart this base a little bit. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone. Before we went to break, we were talking about limited brands and another month of strong same-store sales growth at the company that operates Victoria's Secret and Bath and Body Works. This is a base that's setting up, and a breakout can't be ruled out over $50 a share. But this is an example of a handle area forming here that is showing a lot of wide and loose, erratic price swings in the handle area, which you don't want to see. And there's also been some heavy volume declines in limited brands handle area as well. So all in all, this base looks a little bit shaky to me. It's not out of the question that we could see an eventual breakout over 50.75. It is a high-quality retailer, but it is important to kind of analyze price and volume inside a base and look for flaws, and this is definitely a flawed handle area. When a stock drifts lower and forms a handle area, again, sort of a shakeout before a breakout, you'd like to see an orderly decline. You'd like to see some tight some tight trading in the handle and also low volume. So limited comes up short on all those different areas. So it's a bit flawed, but we'll keep an eye on it because it could work. Elsewhere in the retail sector, Pier 1 Imports, that's ticker PIR. We'll take a look at Pier 1. They had pretty good sales numbers as well. up 6.2%. It also gave preliminary second quarter earnings guidance, forecast earnings slightly above expectations after hitting an intraday high of $18.90. Pier 1 is now trading at $18.40, pretty much at its session low, still up close to 1% on the day. But Pier 1 has been executing nicely in recent quarters as well. Speaking of nice execution, Costco, good numbers from Costco as well. Same-store sales up 6% at this name. Costco outperforming nicely today, up 1.8% to 98.84. Flirting with a little mini breakout here over a swing point of 97.76. This is a pretty short consolidation that it is coming out of, but I've got to give credit to Costco for continuing to show excellent relative price strength in the market. Didn't seem that long ago where Kohl's was really kind of a struggling stock, but it's been in rally mode basically since the beginning of July. Stock is up 69 cents today, 1.3% to $52.99, trading near its session low after hitting an intraday high of $53.74. Same-store sales at Kohl's up 3.4% in August, almost double expectations of 1.9%. Taking a look at some story stocks today. Sears Holdings getting taken to the woodshed, as it were, down $4.39, 7.6% to $53.06. It's leading the S&P 500. It's going to be replaced by LyondellBasell Industries, ticker LYB. That will be as of the close of trading September 4th. Something to do with its float. I didn't quite follow the reason why it was being removed from the S&P 500, but it was had something to do with maintaining a certain float or total shares available in the marketplace. Sears has been, was actually a pretty good, had been a pretty good performance, fallen on hard times recently, but stock getting hit hard today, down 7.6% to $53.06. Let's check in on shares of Facebook here. Shares of Facebook really still can't get out of its own way here, down trading at $19.15, up 5 cents on the day. Interesting industry research group eMarketer lowered its revenue outlook for Facebook this year down to $5.04 billion. That would still be up 36% from 2011, but eMarketer's earlier forecast was for revenue of more than $6 billion, so they lowered it by about $1 billion. Ad revenue this year is expected to grow 34% to $4.2 billion, but again, eMarketer was looking for ad revenue of about $5 billion not that long ago. So you want to know how a stock can fall from $35-40 a share all the way down to 19. It really is about fundamentals. Is Facebook worthy of a premium valuation? And certainly a lot of questions about growth going forward for Facebook. Other news today, asset manager Carlyle Group announced plans to buy DuPont's performance coatings unit for $4.9 billion in cash. Let's take a look at Carlyle Group. That's a publicly traded company. I thought it was. Let me just see here. Maybe not. There it is, Carlyle Group CG. Let's before we get into break, we'll just get a quote on Carlyle Group. Shares up 11 cents to $25.90. Carlyle Group is also continuing to show relative price strength. A lot of stocks out there showing relative price strength, that's for sure. All right, folks, we'll be right back. Thanks very much for tuning in to Breakout Investing. Stick with me. Back soon.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back to Breakout Investing, everyone. Ken Shreve with you. Thanks very much for tuning in. 877-927-6648. That is the toll-free number to use if you want to give me a call, talk about this market. Yeah, I mean, it's nice to see stocks coming off their lows here as we head into the close. We've got about 25 minutes left to go in Thursday's session. Right now, the Dow only down about 68.5 points, 13,039. It's about a 0.5% decline. The NASDAQ down close to 23 points, now about 0.7% to 3,058, and the S&P 500 down almost 7 points, 0.5% to 1,403. So trying to rally here as we head into the close. So that's good to see. Take a look at some earnings reports today. Check in on shares of Pandora Media. This was an interesting earnings report that the company announced. Pandora gapped up sharply. The stock is up about 16.5% today to I gotta fix my headphones here. Excuse me for a minute. There we go. Pandora up 16.5% to $11.75, trading near its low for the day, well off its high of $12.43. But the numbers were pretty darn good at Pandora. I think this is eventually going to turn out to be a very real internet business. A lot of recent new issues, of course, struggling to monetize big revenue growth. But earnings were down 50% from a year ago to a penny a share, but that was still pretty good because analysts were expecting a loss. Sales were up 51% to $101.3 million. So Pandora not having any problems delivering excellent top-line growth. Total listener hours at Pandora climbed 80% from a year ago to 3.3 billion hours. Active listeners are now at 54.9 million, up 48% from a year ago. Pandora also doing a good job with mobile. Its mobile radio initiatives are paying off. Mobile advertising nearly doubled to 59.2 million in the quarter. So good numbers overall at Pandora. Two other new issues that are doing fairly well with mobile at this point. Let's check in on shares of Zillow. That's ticker Z on the New York Stock Exchange. Shares of Zillow coming back to life in recent days. It's working on 4 straight wins here. Stock is up 9 cents now to 41. And I'm going to continue to watch this for a breakout over 44. I think this is, I really believe in this company's growth story. And again, a company that has made a lot of inroads when it comes to monetizing mobile. And the other new issue that still has a lot of support out there, excellent fundamentals, good growth prospects, shares of LinkedIn right now down $1.06. It's about 1% to 107.94. Still has a ways to go before we see a technical breakout here. We may or may not see one, but fundamentals are strong enough. It's a newer company. I think if new money continues to come in from the sidelines here between now and the end of the year, LinkedIn could be a beneficiary. Apparel makers have been doing pretty well. We had good numbers recently from Phillips Van Heusen, or PVH Corporation. Also had earnings from Oxford Industries. This is a company best known for their Tommy Bahama brand, another apparel maker here. Earnings were up 14% from a year ago to 65 cents a share. Sales up 15% to about $207 million. Kind of a wild day of trading for the stock. Hit an intraday low of 48.26. Now trading at 53.71, more than 5 points off its intraday low, up $1.04, almost 2%. So Oxford Industries recovering bullishly after early weakness. The numbers were pretty good. Take a look at shares of Amazon. Amazon, of course, has a big press event in Santa Monica, California on September 6th. That will be next week. It's widely expected the company is going to unveil a revamped Kindle tablet. They did come out with a press release today saying that the Kindle Fire is sold out and that total tablet sales in the U.S. are 22% Kindle. So Kindle now makes up about 22% of U.S. tablet sales. So that press release from Amazon came today ahead of its press event on September 6th. All right, let's take a look at shares of Dick's Sporting Goods. This is another stock setting up here in the market. Stocks have been moving for quite some time, so it's not exactly easy to find stocks in good technical setups. It's pretty easy to find extended stocks. It's easy to find stocks that have been running higher for quite some time. But Dick's firming up at its 50-day moving average here. We'll show you the weekly chart in just a little bit. In fact, I can do that right now. If you look at a weekly chart for Dick's, and we'll see a nice little base setting up here, forming the handle area now for almost 4 weeks. You have a swing point of 52. So at 49.81, it still has a ways to go to prove itself. This is a breakout candidate, but would like to see it clear that swing point of 52 in heavy volume. But Dick's, widely regarded as best of breed in the sporting goods retail space. Here's a new name that popped up in my screens here, Omega Healthcare. This is a real estate investment trust showing very nice price action in this market, trending above its 50-day moving average. Big dividend yield here of 6.9%. Anytime you get strong relative price performance and a juicy dividend yield, it's worth paying attention to. Omega Healthcare, as its name would indicate, they invest in healthcare properties across the U.S., but in a short consolidation here, outperforming nicely today, up 1.3% to 24.20. And again, a nifty dividend yield of 6.9%. You know, there's not much in China that has my eye right now, but I am still encouraged by recent price and volume action in Mindray Medical, ticker MR. They are based in China, but this is a stock that has plenty of fund support from U.S. mutual fund investors. It's a medical device maker that operates in basically three business segments: patient monitoring and life support products, in vitro diagnostic products, as well as medical imaging systems. But big move for the stock earlier this month in early August on strong earnings. I love how it's holding gains tightly here. In fact, we'll take a look at a weekly chart for perspective here, and we'll see the stock is just working on 3 straight weekly price declines after a huge move again earlier this month, but coming back in light volume here, so its technical picture is still very much intact, and I like the look of Mindray Medical here. Take a look at another new issue that I haven't talked about much: Palo Alto Networks, PANW. This is another interesting company. Annual earnings growth a little bit suspect. They're supposed to grow earnings nicely this year, but the following year not so much. But shares of Palo Alto Networks are right now down 1% to 64.10. Now, Palo Alto Networks came public in July. Just a couple of months ago, or last month, at $42 a share. It's now at 64.10. So there's definitely buying interest in this stock. They make network security infrastructure products. Triple-digit sales growth in recent quarters. Pretty good growth prospects. Like I said, annual earnings a little bit suspect in 2013, but that might just be a one-off type thing as the company invests or I haven't done enough work to know why earnings are expected to decline next year, but I do like the top line growth in recent quarters. So Palo Alto Networks, definitely another one on the radar here, looking pretty good. Like to see it consolidate just a little bit more, though, before considering a buy. Some of these 3D companies, Stratasys, 3D Systems. Stratasys is, continues to show relative price strength. It was up big on Tuesday, up big on Wednesday. Now it's down 5% today to 65.76. I'm just going to show you this chart as an example of a stock that you just don't want to chase this one up here, because the breakout was over $55 a share. Okay, that was in July. Here was the breakout day. It breaks out of a base, and it's just in the early stages of a consolidation here. If it comes down to 58, bounces in heavy volume and finds support, maybe you could buy just a small starter position. But I really would like to see this consolidate for a little while longer. You just want to be careful about chasing a strong performer like this, because it is extended, and the same holds true for DDD, which is 3D Systems. 3D Systems down almost 4% today to 42.59. It's a very, very strong stock. There's no question about it, with excellent fundamentals, growth prospects, finding good support at its 50-day moving average during its strong uptrend. But if you look at a weekly chart for 3D Systems, you'll see that the last breakout was, all the way down around, $30 a share. So right in this area here, and it's just been shooting higher. $42.50 stock now. Last buy point at 30. No thanks. You just don't want to chase it up here. Wait for it to form a new base, and that's the best way to handle an extended stock. Don't chase it. Wait for it to take a breather. And so I just want to give a quick word on those 3D companies, Stratasys and 3D Systems. Under Armour is another name here that's looking very interesting, holding gains tightly here. in a short consolidation, really continues to show relative price strength. This is an institutional quality name, obviously another apparel maker here, up 29 cents today to 57.85. Lot to like about Under Armour. Yeah, it has a high multiple, but you just see a stock holding gains bullishly like this can often precede even higher prices. So Under Armour looking pretty good. And let's check in also on NSM. I did mention this name on the show yesterday. Another stock that's hanging in there pretty good, and I just want to go over this chart again. We'll go. I think I have a stored version of it. Yeah, here's Nation Star Mortgage Holdings. Has been just a tremendous performer in the market, recent new issue, but this one does have the look of an ascending base here. You can see three quick pullbacks here between June and August, and wouldn't be surprised to see this one eventually take out the 29 level. In order for it to do that, we're going to need more money coming in from the sidelines, and there are just so many headlines coming up. It's just going to be interesting to see how the market responds, because you hear a lot that September is typically a bad month for the market. I went back over the past 6 years, the past 6 Septembers. I saw the market up 3 months. I saw it up 3 times. I saw it down 3 times. Saw the Nasdaq up 12% in September 2010, I think it was. So you can't be too quick to say that it's going to be a rough month in September, even though a lot of the headlines are telling you that September could be a rough time for stocks. So we'll see how that all plays out. But Nation Star Mortgage Holdings is also interesting here. Let's take a look at Francesca's Holdings. Ahead of earnings. They report earnings next week. Another name just continuing to show relative price strength after a recent breakout over 32. Stock was recently trading around 35.98. So, another breakout here that is holding up just fine. It is down 30 cents today, fairly tame decline, but Francesca again coming out with earnings next week. They're expected to report profit of 24 cents a share. That would be up 60% from a year ago. Sales up 39% to just over 71 million. So it's a fast-growing retailer with a lot of potential and a great track record of growth. Also, next week we've got Ulta Beauty. Ulta Beauty coming out with earnings next week, and this is another stock that's acting pretty well. It recently climbed back above its 50-day moving average, and right now down 65 cents to 93.68. They have more than 400 stores. They almost in all 50 states. I think they're in 45 states or so, but always very busy stores. Just a handful of retailers that are firing on all cylinders here, and I would put Ulta in that group. Wouldn't be surprised to see nice numbers from Ulta next week. Some stocks not keeping, well, I should say just kind of following the market lower here. CF Industries coming down close to its 50-day moving average here. Low volume decline. Wouldn't be surprised to see this one find support at its 50-day line around $200 a share. This is a breakout that really did not go anywhere. It recently tried to break out over $208 a share. Went over $215 soon after, but has been under selling pressure. But again, a low volume pullback, not really seeing signs of massive institutional selling in this stock. So again, wouldn't be surprised to see this one find support at the 50-day around $200 a share. Also in the same industry group, Agrium, under some pressure here. It is underperforming today, down 3.1% to 96.15. Still holding above its 50-day moving average. Has about 2.5 points to go to get down to that key support level. And we'll end by talking about shares of Salesforce.com, which remain under selling pressure, down another 1.8% today to 142.98 after recently reporting strong earnings. All right, folks, headed into the final break. We'll put the finishing touches on today's show. When we come back, you're listening to Breakout Investing on TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, completely free of charge. We'll even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back to Breakout Investing, everyone. Well, about 20 minutes ago, it looked like the market was trying to come off its lows, had a little bit of buying coming into the market here, but here we are again with the NASDAQ Composite down near its session low, down 31 points, 1% to 3,049. Still not seeing a whole lot of volume behind the downdraft today, so I sent a note to my Ultimate Growth Stocks subscribers saying, it's just no need to be too quick on the trigger here. When I buy a growth stock, I do like to give it as much room as possible to work. So I don't want to be too quick to take quick profits and get out of a stock prematurely. And bottom line, just not seeing meaningful sell signals in the market at this point. Not even today selling, the fact that there's not a whole lot of volume behind the decline, and a lot of leading growth stocks still holding up quite well. Doesn't mean I need to get too bearish at this point. So NASDAQ Composite down near its session low, 31 points to 3,049. The S&P 500 is also bleeding into the close here. It is down a little more than 10 points now, 0.7% to 1,400 even. So it's right at that 1,400 price level. Certainly a psychologically important level for the S&P 500, just like 13,000 is for the Dow. The Dow is down now 101 points to 13,006. So it's interesting to see sellers coming into the market here. Notice that the Dow is actually getting pretty close to that 50-day moving average here at 12,929. So what is that, about 75 more points to go, and it'll be sitting right at that key support level. So hey, we'll hear what Ben Bernanke has to say tomorrow. The release of the Fed minutes not that long ago seemed to hint pretty strongly that the Fed was ready to move. Now, market's kind of thinking that it may not happen. We may not get anything from the speech tomorrow at Jackson Hole. I think that's probably likely, and it's also again possible that we may not get stimulus at the September 12th and 13th meeting as well. How the market reacts to that, hey, good news has been priced in. It could be disappointing to the market. As always, just pay attention to individual holdings that you have. Be careful not to let, if you own some aggressive growth stocks, be careful not to let, a small loss get out of control. If we see more selling in the market and there's some good volume behind the selling, it might be time to take a little bit off the table. But again, you don't want to be too quick on the trigger here. Economic data coming up tomorrow. We've got the Chicago PMI for August. We've got the final reading for Michigan sentiment for the month of August tomorrow, and factory orders also for July. That's due tomorrow. Coming up after the close, let's check in on Splunk, SPLK. This is a recent new issue, provider of data analytics software. Splunk has just been kind of moving sideways, not doing much here, down 30 cents today to $30.54. Went public in April at $17 a share, so it's doing pretty well. Recently trading around $30.54. It's expected to lose 4 cents a share on sales of 39.8 million, which would be up 53% from a year ago. And then action sports retailer Zumiez, they cater to the snowboard, skateboarding crowd. Zumiez seeing some buying interest ahead of its earnings report after the close. Shares up 2.6% to $32.39. Still a broken stock here, but good earnings growth, good top-line growth expected here after the close. Ticker ZUMZ. Coming up next, the Tom O'Brien Show. Have a great afternoon, folks. I'll be back to end the week tomorrow, 3 o'clock Eastern, with another edition of Breakout Investing. Take care.